Hello and welcome to Your Forex Riches. This is the spot where successful traders never stop learning. This is our weekend technical analysis wrap up for April 3rd, 2011. Before we begin our video, we need to talk about our disclosures. The main important thing to understand is that any symbols we use today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can't lose your money. Any strategies we use today are for educational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your responsibility. Trade at your own risk. Let's pull up the charts. So we are going to begin with the dollar yen. And on our daily chart, we see the wedge that we've been watching and playing for several weeks. And we got a break to the downside. And with Friday's action, we have a break to the upside. And what's also nice about that, not only did we break up, but we also broke above the 200 moving average and we closed above it. So that's certainly good. However, you can see we have this large wick here. And so you have two options. The safest and simplest is to go with the wick and put an alert up here. But you might consider coming down halfway. And when you get down halfway, you come into this resistance consolidation area back in December. If you come down halfway, around 84.40, 84.38, in that range, you get kind of where these wicks are, so 84.40-ish. And, you know, let's see if it can get back up there. Aggressive people may just go above today's close, Friday's close, but I would say the best one is halfway up this wick. Let's go to the dollar Canadian. And we can see the downtrend that this has been in. And one of the things we'll see is that we basically broke and made a new low. And so the question is, how low can we go, or are we going to go lower? Well, one thing we might want to look at is, you know, we got to draw our happy trend line. So I'm just going to connect this up with these wicks in here. And see if I can grab this wick in here. I can. And try to project it out. And although it's, we don't have an actual match, what we can see is that there is some air in here for us to push lower. So each time we've come down to this line, bounce, line, bounce, line, bounce, touch the line again, bounce, hung out for a while, came back to the line, bounce, came back to the line, bounce. So there is room for us to go lower. However, what you have to be careful of, are you going to get caught in this? It's great when it bounces and comes right down, but there's also some of this. So the safest move, the best trade, is a trade off of the 50 moving average. The 50 moving average on the daily chart has been resistance. Even though it got violated here, it came right back into form. So the safest trade is to trade short off the 50 moving average, and you might even try a long off of this downtrend line. You can put an alert below Friday's low to see if you can catch a further push down, but again, remember that's going to be a higher risk trade because the move has already been 1, 2, 3, 4, 5 days down. The franc. And this one's interesting from the standpoint of it has made its way back to the 50 moving average and actually immediately pushed down, because for the most part, -1 violation here, the 50 and the 20 have been acting as support. However, what else do we have? Well, we have a potential of a new higher low. So for me, what I would like to see out of this one, well, you can see some a 200 on the hourly was a very nice buy. But for this one, I need this one to complete the trend. Are we putting on a higher low? Great. Let's trade that. If we're going to break lower, then let me see that. But right now, I think this one, as far as safe trades, we got to let this one resolve itself and tell us whether or not it wants to go higher or lower. And you can see with this swing low here, this swing low here is basically where we closed. After it went up to the 50, it came back and right back to it. So there's certainly some resistance here that might be display itself further in today's action. Now we're going to go to the euro dollar, and we can see the very lovely uptrend that we have been in for a while here, and when we actually zoom in a little bit, we lose this past swing high. So let's measure it up a little bit, and that's basically where we are at this swing high. Let's go ahead and draw that in here. Even though the actual high is a little bit higher than this wick actually, the second wick is where we're pausing at these couple days here. So a break above the wicks of the past 2 weeks here certainly would be bullish, but we can see the safest trade is every time we've come down to the 20 moving average. The past, for the month of March, we've gone up, and even Friday's action came right down to the 20 moving average and went up. So as long as we're in this up trade, the safest trade is a bounce off the 20 moving average, a long off the 20 moving average. And right now we need to see if we get above these wicks, then we have another long potential entry also. The euro franc, excuse me for the cough there, and look at that. This one's going to be interesting because we can see that the 200 moving average has held up as resistance, and we've come all the way up to there and closed right at the 200 moving average. And that also, you can also, even though we violated it here, if we extend this out a little bit and kind of ignore what happened, we also have some resistance at the 132 price level. So we sort of have another ascending wedge coming into play. And so what I would like to see, even though we're at the $200, I would actually even wait and let us get above 32 before I would go long and see if the 20 or the 200 will hold up as support to catch that trade. Certainly it looks like it wants to resolve higher. Nice action on the hourly. Looks like some trades off the 50 moving average on the hourly are certainly long entries. But again, this is another one that I want to see resolve itself. And that's the theme that you're seeing as I keep going over our charts, is that you don't need to be in at 0 or selling at 100. There's plenty of money to be made in the 20 to 80 range, meaning catching the middle, getting the confirmation, catching the high probability trades. There's plenty of money to be made there versus trying to catch the extremes, the falling dagger or the rising cannon. Euro Canadian also seems a little wishy-washy for me. You can see on the hourly the resistance of the 200. We've put in some swing highs here. However, let's zoom back out, and we have the past swing high a little bit higher. So the question is, are we going to bounce off of all these moving averages to 20 to 50? So I want to see confirmation of that. The long entry that you might have had off the 20 really didn't happen, and whether or not we'll see that those people who might have bought at the 50 or waiting for the 200 also will have to wait and see if that comes to fruition. We'll go to the euro pound. Also nice uptrend on the daily, not as quite as high as the euro USD, so there is a little bit more room to run. However, we can see that we probably want to get our nice safe entries at the 20 moving average What's interesting about this one is now we're crossing above the 500. So this is the first time we've seen that on most of our pairs. So definitely some bullishness on the euro pound. And on the hourly, you can see bounce off the 100. Even the bounces off the 50, bounce off the 200. Definitely seems to be wait for pullbacks to the moving average in order to go long. We'll switch it over and go pound dollar. Kind of consolidating right now. When we look at the hourly, we saw that the 200 is respected. Resistance, finally broke through, came back, resistance. So it will be interesting to see if this action here, which actually is above the 200, be interesting to see if we can go higher. So if we go 1.61300, that gets us above the 20 on the daily, gets us above, well, not quite above the wick from Thursday, but I would be interested to see that. I'd be interested to see if we can stay closed above the 200 on the hourly. Aussie dollar, lovely uptrend. You can see what we were playing the break out of, and we did get that break. And we're kind of in what they call blue skies. So I will come down to the hourly and again try to find some nice safe entries off of a pullback to the moving average. And we'll finish off with the New Zealand dollar. And it's going to be deja vu. Delete some of these. Not quite as bullish as the Aussie dollar, but it is certainly moving higher. And now it's coming into some choppy action on the daily, so we have to be careful. But what I would do is zoom down to the hourly, and you can see there seems to be some safe trades longs off the 50 moving average. So that's the way I would play the New Zealand dollar. Some of our resources that you'll find us on YouTube, Facebook, and Twitter for our updates, videos, and some of our calls you can find out there on Twitter and Facebook. We've got a great relationship with the trading room, Earn While You Learn. Great calls based upon market profile. We've got a great broker that we work with. Great leverage, easy access to the money. And we have a great Forex signal software that will help you predict a Forex trend for the next 8 hours. And if you want the same great technical analysis videos on futures, we have our other blog at eminiTradingCoach.com. Thanks, guys, and I'll see you next time.